Now we're getting some breaking news as markets nosedive at opening, but they have picked up in the early trade, we are told. Remember, this comes after the US Fed announced another 25 basis point reduction in key interest rates on December 18th, bringing the range to 4.25 to 4.5%. We have Mangalam Malu from CNBC TV 18 who's joining us on the broadcast. Mangalam, this was a widely anticipated decision, right?
This was a widely anticipated decision, but the reasons why the markets have nosedived is because it's not the rate decision, it's the commentary that has spooked the street. A couple of things have happened. Yes, there was a 25 basis points rate cut that was expected, that happened. But in the last policy of the Fed, they had anticipated 4 rate cuts in 2025. That has been curtailed to just about 2. So that is a concern because of the lower number of rate cuts that, the street was not factoring in. There was a strength in the dollar and there was further increase in the US yields. What does all of that do to Indian markets? One, the rupee weakens. And secondly, remember, we've already seen the rupee weaken to around that 5 mark, the past 85 mark this morning. That implies that, there could be some further pressure on the foreign institutional investors to sell out of the Indian markets. Apart from all these factors, the commodity prices have reduced, and as a result of which, we've seen a decline in all the metals. Weakness in the US economy, weakness some of its companies in India as well, IT services. So the IT stocks are lower in today's trading session. But having said that, the Nifty is already corrected about 1,000 points over the last sessions, and we are at important, crucial levels when it comes to the technicals, and which is why we've seen some, recovery from the lows. And typically, towards the last, fortnight of the year, volumes thin out. So any sort of news has a larger impact on either side, the plus or the negative side of the market. And that's exactly what is playing out. What we need from here on is any sort of improvement in FII flows into our market, improvement in earnings, and also, some outlook on the economy which shows signs of improvement is something we'll keep an eye out on as the next quarter starts. So up until December 31st, one would advise the retail investors to not participate regularly in the markets because you might be stopped out on either side. Just keep your SIPs going. And from Jan 1st, then you will have the earnings season coming by. Companies will give their outlook on the economy and their earnings, etc. So we'll keep an eye out on all of that. From now to December 31st, just stay put.
Right, absolutely. Thank you so much for all of that information there, Mangalam. With that, we're shifting our focus. We're getting some more breaking news. Now, remember, a spinner from India.